Hello and welcome to the Common Weal Policy Podcast. I'm Craig DL, I'm the Head of Policy and Research at Common Weal. And this week my guest is Tim Rideout, a previous guest on the podcast, but one who's been recently described in the mainstream media as a controversial economist. Tim was previously on episode 71 of the podcast talking about currency in an independent Scotland, and he's been very busy since then campaigning on this matter. Hello, Tim, how are you?
Hi, Craig. Well, thanks for asking me on again.
Really good to speak to you again, especially as you've been quite busy. So this weekend past, you were at the SNP conference with a motion calling for work to begin on setting up a Scottish central bank, and it passed overwhelmingly in the end.
Yes, I think it was something like 90% in favour. So that's sort of fairly unanimous insofar as these things go.
Congratulations. So we're going to talk about that motion a little bit later in the show, but I wanted to try and give folk kind of a story so far. How has your campaigning on currency and an independent Scotland led up to this point? I personally first became aware of you back in 2016, 2017 as a result of Common Weal's own work on currency in an independent Scotland. There was a series of papers by myself and by economist Peter Ryan talking about the technical aspects of setting up a currency, and this led you to get in touch with us, and we sparked a conversation from there. But it was really probably 2018 when the Growth Commission published their report, and somewhat surprisingly to some, came out with the idea that an independent Scotland would not have its own currency, at least initially. Tim, can you tell us just, I know the folk who have listened to the podcast, especially since the start, will have heard this story before, but could you tell us a little bit about the Growth Commission's plans as you understood them and your reaction to them when they came out with that in 2018?
Yeah, well, what we're talking about was Section C of the Growth Commission. And basically that suggests that we could be using sterling for 10 to 15 years after independence. It set out 6 tests that we would have to meet before we could move to our own currency. And it sort of envisaged that in order to have our currency, we'd have to sort of open up a piggy bank and pay in savings every year to build up reserves in order to then have foreign reserves to back the currency when we eventually got to that point. I think I don't know who actually came up with the Section C, but I took one look at it and thought the whole thing was complete nonsense. The idea that you have to sort of accumulate reserves in a piggy bank before you can start a currency is just nonsense, and it's impossible to achieve, because the Scottish government, if they were going to try to do that, they'd have to run a surplus every year. They've got that would be austerity on steroids, and if we did that for a decade, everyone would be begging to be readmitted to the UK, I think.
Yeah, I mean, I remember at the time when I looked at the 6 tests, I ran down them and spotted several of them which I considered to be impossible or nearly impossible to achieve. One of the other ones being evidence that the Scottish economy was diverging from the UK economy, but the whole point about sterlingisation was to keep the Scottish economy quite closely pinned to the UK economy. So it was almost like it was setting up these tests as a barrier to prevent a Scottish currency rather than a marker to meet before we launch one.
Yeah, I think they're in the same vein as Gordon Brown's tests about whether we should adopt the euro.
So the Growth Commission eventually did come to the SNP conference floor in 2019 with a very expansive motion adopting essentially the entire report wholesale, but the debate around it really focused in on this currency section, especially with your involvement creating an amendment to that motion. Can you tell us, just, I know you talked about this last time you were on the show, but can you tell us a little bit about that story, about how you managed to win that
Yeah,
vote.
it's a bit ironic that one of the reasons National Secretary gave for taking out 2/3 of the recent central bank resolution was that it was too long and detailed. And yet the adoption of the Growth Commission in April 2019 runs to 4 pages in the conference handbook and something like 33 clauses. But as you say, the bit that everyone narrowed in on was currency at the sort of final half dozen clauses. There were various people who tried to put in amendments. George Kerevan had one, Dalkeith's branch, we put in one. We had a similar fate because I think I tried to change all the clauses and only one of my suggested changes got onto the conference agenda. But that was the one which changed the implementation and basically said that the policy of the SNP should be that we should start the preparations for the new currency as the day after the vote for independence, with the aim of introducing the new currency as soon as practicable after Independence Day. And that effectively sort of cut the whole rug from underneath the Growth Commission by rendering the 6 tests to be purely advisory and removed any mechanism for actually testing whether anything had been met or not met.
And that didn't stop the SNP leadership still clinging to those tests. I remember Nicola Sturgeon herself, minutes after the vote, tweeting out publicly that saying that she welcomed the results of this vote, but essentially reinterpreted the phrase "as soon as practicable" to mean when the 6 tests are met. Do you agree with that, or how soon, in your view, is as soon as practicable?
Yeah, well, Andrew Wilson was the same because he was on the BBC the next morning saying it changed nothing. But in reality, it changed everything. And I deliberately put as soon as practicable into the amendment precisely to avoid having any sort of fixed date. So I didn't want to say, the first day or 2 weeks or 3 months or whatever, since, politicians always need a little bit of wriggle room. But as soon as practicable, to me and everyone else except the SNP leadership, is a couple of months. So
can you take us through, in your view, the process that Scotland would go through? We've just voted for independence. We've decided that we want this currency as soon as practicable after Independence Day. Take us through the process. How do we form a new currency?
Well, the first step is to get the central bank authorised and start building it. And that's mostly technical aspects, such as ordering the IT systems that will be required, both within the bank and also for a Scottish payments system. Getting some premises for the bank, starting to employ staff. The estimate we've got in our plans is that by the end of 3 years or so, the central bank would be employing about 800 people, which would be a little bit smaller than the Irish Central Bank, but not very much. And it would, and not least, there's the issue of commissioning banknotes and coins. And from my research, is the banknotes and coins are the most time-consuming aspect because it takes about a year to go from appointing a printer and manufacturer through to actually having them in your hand. So you would then get to the stage where, if there's a 2.5-year transition period between vote and Independence Day, then you just about get to the point where the central bank would be ready to introduce the currency into circulation a couple of months after Independence Day.
Yeah, it's interesting you say that the size of the central bank there is sort of similar to the Irish bank. And I remember in 2017, I did a study of central banking actually around the world, not just in Europe, and came up with roughly the same size. Central banks do tend to scale quite linearly with the size of your country, albeit a little bit of wiggle room here and there, depending on actually how much you want your central bank to do. Do you want it more involved with financial regulations, for instance? Yes,
a lot of the basic functions of central bank are actually very simple and don't require many staff or resources. It's I think the A typical central bank is probably talking in terms of a few thousand accounts that they manage, compared to, say, the Royal Bank, which has millions of accounts. Basically, have to just be able to debit and credit the government's accounts and the reserve accounts of the commercial banks. Everything else is sort of to do with monitoring the economy. A large part of what the Scottish Reserve Bank would do is statistical analysis of things like credit card transactions, mortgage applications, money flows in the foreign exchange market, things like that, which requires a large statistical function. It's also got a regulatory aspect of the macroprudential regulation of the banking community, ensuring liquidity on all those sorts of things. So that's where most of the staff and the effort is going. It's not in actually managing a bank account.
So how does this compare to the Growth Commission plan? Because as we said, they want Scotland to sterlingize and unilaterally use the pound, but they have also suggested setting up some kind of monetary institute to do some of the functions of managing this. What's the difference in practical terms between a full central bank and this more limited?
Well, the Growth Commission says that they would set up a central bank, but without a currency, it's not really a central bank. It's a sort of it's in the same position as a commercial bank. So, a Scottish Reserve Bank without a Scottish pound would just be like one of the Tesco Bank or one of the existing commercial banks. It doesn't have the ability to create money. It's not a lender of last resort. If you were the risk manager at the Royal Bank, and you have to keep the bank's money, so that's the actual cash that the bank has rather than the customers. If your choice is between keeping it in a reserve account at the Bank of England or putting it into a reserve account at the Scottish Reserve Bank, when the Scottish Reserve Bank has no lender of last resort ability, it's just like a normal commercial bank. Well, you wouldn't do that. You'd keep it at the Bank of England. So I don't quite know what a supposed central bank without its own currency would do. As I say, it's in the same position as a commercial bank. It can go bankrupt because people, if the banks take their money out, then it's a bit stuffed. So it's a sort of, I don't know, sort of pretend central bank that nobody's really going to use.
Are there any other precedents in the developed world for this Growth Commission plan?
Not really. I think the sort of example that people would probably hold up is maybe Panama, which uses the US dollar largely for historical reasons, because it was the Panama Canal Zone, and until the Americans gave it back to Panama. So for that reason, it had a century of using the US dollar, because effectively most of it was part of the US. But I don't think Panama is really equivalent at all, because they do manage to use the US dollar. If you go, I haven't ever been to Panama, but if you go there, then that is the currency that people have in their wallets. But if you look into Panama, 90% of transactions in the Panama economy are apparently in cash, so US dollar banknotes and coins. Most people who live in Panama apparently don't have any online banking or digital payment facilities. Most of them don't have a bank account. So it's not at all the same as Scotland. If you're just using notes and coins, then obviously any country could use any notes and coins if they can just get enough of them. But that's not at all the same as a situation like Scotland, where something like 96%, 97% of all transactions are digital.
One question that I know you've answered in a couple of interviews elsewhere this week, and one that has been levelled at Andrew Wilson and the Growth Commission several times, but has not been answered from that side. What are the implications of sterlingisation and joining the EU if an independent Scotland chooses or wishes to do so?
I believe the European Union's rules are absolutely clear that a pre-qualification for being able to apply to join is that you have your own currency and central bank. So if we're sitting there using sterling, which is now the currency of a country which has made itself rather persona non grata in Europe, then I think they're just going to say no. Once you've got your own currency and central bank, so forth, then come back and we'll welcome your application, but not until then.
Yeah, I do know that there is the case of Montenegro, which is in a relatively similar situation, being a Euroized country, it unilaterally uses the euro, and has been trying to join the EU. And this has been one of the major sticking points. And it is using the currency of the political union it wants to join, not the currency of a country that has just left the EU under, let's say, less than friendly terms.
I'm not sure with Montenegro. I think it's not someone I'm totally familiar with, but I suspect that they're a little bit like Panama, that it's quite easy to just, import enough euro banknotes and coins to make the economy work. Whether they're some way connected up to the Eurozone payments system, I don't know. You have to look into that. I suspect it's a very cash-based economy.
Well note that their lack of monetary powers effectively precluded them from doing much in the way of COVID spending the way the UK has and many other countries have. In fact, they had to go to the IMF for a loan to pay for their COVID policies. Is that a danger that Scotland could face, do you think?
Well, if under sterlingisation, the Scottish government would be in a permanent financial crisis, because it will have a deficit. The Growth Commission somehow imagines that we're going to get to a position where we have a surplus and then therefore be saving up, but that's not going to happen. So if it has a deficit and it's not a monetary sovereign, then it has to borrow that deficit from the international market. And that would mean the Scottish government would always be going off to London to try to persuade people to lend it the money to cover the budget deficit each year. And those people would be saying, all right, well, you need money. Well, not sure about the risks of Scotland, but so let's say 5% when the UK is paying 1%. A, we're going cap in hand all the time trying to get more money. B, we're paying a lot of interest on it. If somebody says no, well, we don't want to finance you this year, then the government would have to do emergency budget cuts, and we've got to repay all this, which means running a trade surplus. So we'd have to suppress domestic demand. So that means getting people in Scotland to buy less in order to free up money by having an export surplus. So that would be very unpleasant for people in Scotland.
So let's move on to the motion that you just had passed at the conference. Can you tell us precisely what that motion covered, and tell us a bit about the story about how you came from your 2019 motion up to this point?
Well, it's one of the rules of the SNP conference that you can't just rehash the same thing as you have already done. We already got a motion approved in 2019, which supposedly set the currency policy, despite, as you say, the leadership completely ignoring that. But we can't just go back with the same motion and say, look, we're going to pass it again because you ignored it last time. So you have to sort of move things on and come up with something a bit new that develops the policy. And so I thought the logical thing to do was to say, right, well, last time the motion said we need to be ready to start the preparations the day after a vote for independence. So let's start specifying what those preparations are. And one of them would be to have a bill ready to introduce into Holyrood that would be the legislation to establish the Scottish Reserve Bank. So that's really what we set out to do, to require the SNP to start drafting that bill so that it's sitting there on the shelf, ready to, the day after the vote, to be put onto the agenda for the Scottish Parliament. Why
do we need this now? One of the questions that I'm often asked when I'm talking about, especially post-independence policy, is why do we need to be thinking about this now on the other side of the independence referendum? Can't this just wait until after independence?
No, because then you'd be spending 6 months, a year, or whatever, while some committee of civil servants start thinking about what you need in the legislation and so on. That's half your transition period wasted. So then you're not ready to introduce the currency. So you're going to spend the first couple of years of independence in an extremely exposed and precarious position, as I say, always groveling to the markets and worrying about a sterling crisis. So no, you need to be prepared. And one of my disappointments is that the SNP at the moment, well, Mike Russell's supposed independence unit, all it's doing is telling the SNP members that they haven't done enough campaigning, and we need to go out and campaign more until we've got the opinion polls up to 60%. Well, there's no point campaigning more. We need to be able to answer the questions that the voters have. And everyone knows the voters have got questions. There's really 4 questions that have to be answered now before we can start a referendum campaign. One of those questions is, what are you doing about the currency issue? The answer to that, very simply, is we're going to have our own. The next one is, what about Europe? And the answer to that has to be to get into the Norway position, rejoining the single market as of Independence Day. The wishful thinking of the First Minister that we can just rejoin the EU straight away is exactly that. It's wishful thinking. It's not going to happen. Couldn't be achieved in anything less than 4 years after Independence Day. So EFTA and the EEA is the answer to the Europe question. Pensions, the answer to that is that Scotland would take over the state pension. It would become the Scottish Universal Pension. And SNP policy is to try to increase that to the European average. And the border, well, the border with England is going to be exactly the same as whatever the border is between England and Northern Ireland. Unfortunately, unlike 2014, there is going to be a hard border, not in the sense that we need visas or anything like that, because the common travel area still applies, but there is going to be issues about goods going backwards and forwards over that border. So that's so the SNP really just has to, the First Minister basically has to say those are the answers, and that's what they're not doing. And the opinion polls will not move until those questions are answered.
Yeah, and the border question specifically is one that we've talked about on this podcast. I spoke to the late Bill Austin, who was one of Scotland's foremost experts on customs and borders, and I'll link to his show in the description of this podcast. I think that's highly recommended for anyone who has faced this question out there in the political world. So on your motion, when it came to the floor, did you get much in the way of pushback or arguments against or reasons why this motion shouldn't be passed?
No, I was a bit surprised about that. It was actually absolutely nothing at all.
It's unusual for a debate.
Well, partly because it was on Hoppin, but the business convener didn't take any speakers to speak against it. Whether that means there weren't any, or she just didn't take them, I don't know. But the conference itself was not particularly well attended, and I have the feeling that most of the MPs, MSPs, and councillors, or what's known as the payroll vote, because they're supposed to do what they're told, I think most of them were not there. So
what has the reaction been in the wake of the passing? I do know that you managed to achieve a fair bit of news coverage off the back of the vote, but have you had much reaction either from the party or from the wider body politic?
Well, the reaction from the spokesperson for the First Minister was that it changes nothing and the policy remains to use sterling until such time as we decide otherwise. So that's the same reaction as April 2019. I think beyond the SNP leadership, I think the reaction from SNP members, Yes Movement people, and so on, has been extremely positive. So finally, somebody's actually talking sense and moving things on. If
the SNP have signalled that this changes nothing, I take it that means they haven't yet committed to following the members' instruction and to start working on a central bank.
No.
So, well, Tim, just as we come to the end of the show, what's next for you? Was your next step in the currency campaign?
Well, we're looking at, we've already done a fair amount of work on the central bank. There is about a year's worth of work in terms of technical stuff. So the Reserve Bank would have to award contracts for the provision of IT networks, the design of payments network and things like that. The estimates I've got is it takes about a year or so, a year to 18 months to get to the point where everything is designed and specified. You've got the tender documents all ready to issue. That can all be done now, and it doesn't require the SNP or the Scottish Government to give permission. So it does mean we have to raise some money, probably about $500,000 or so from donations, the Yes Movement or something like that. But we can actually do that work at this stage and just put it on the shelf until such time as a referendum takes place. Beyond that, there are other things that I intend to do within the SNP. So we'll be back again at the next conference, which supposedly, well, if it follows the normal timetable, it's supposed to be the spring conference, so April. And I haven't decided what to do yet, but perhaps we should have a resolution about requiring the Scottish Government to have a national competition to design the banknotes.
Well, Tim, if any of that starts to get moving, I'd love to get you back on the podcast to talk about it when it's ready.
Well, thank you for asking me.
Well, thank you again, Tim. That's been a fascinating conversation, and I hope folk have got quite a lot out of it. Just to end the show, as I always do, by reminding folk that Common Weal is entirely funded by our supporters, with an average donation of £10 a month. We don't get government money. We don't have corporate sponsors. We don't have adverts on our website. We don't have the ability to print money like governments do. All we have is the generosity of our donors and folk who visit our shop and buy our merchandise. And I'm pleased to announce that our Christmas shop is just opening this week, and we're going to have some brand new merchandise in there, new books, new T-shirts, and hoodies and other interesting Common Weal things. So I hope folk can have a look there. And next week, I will be back with a very special project, one of my own projects that has been boiling away for the past several years. But I hope you will come back and hear about it next week.